today is also, of course, what is keeping us apart. Just 2 months ago, we didn't expect coronavirus would develop into pandemic that it has today. Now it is afflicting almost every country throughout the world. It is continuing to cause unprecedented challenges to our humanity in terms of public health care, economic stability, and politics and culture.
At Chartered Accountants Worldwide, we also think we need to be thinking about the future. Yes, we need to deal with the current crisis, but there is going to be a landscape after this crisis is over in where we will have to be ready to support our members and their clients.
So good evening, everybody from Jakarta, Indonesia. On behalf of the Institute of Indonesia Chartered Accountants, I would like to first thank Institute of Chartered Accountants of India to initiate and host this very relevant webinar, and also thank you for extending the invitation for IAI to participate in this panelist. I would also like to take this opportunity to express our deepest sympathy to everyone who have been affected by COVID-19. IAI is very committed and support to the national, regional, and global efforts in dealing with this pandemic. As an organization, our first priority is the health and safety of our staff, members, and stakeholders. And effective March 17, 2020, we have fully suspended our office operation for the foreseeable future and conduct most of our internal meetings and member activities online. This is something that we don't even think about it before, and actually we can do it. I also continue to shift classes and CPD activities to go virtual. Just to share to all of you that coronavirus outbreak in Indonesia has up to today taken the life of 399 people, with positive cases moving very fast. Now it's 557. These numbers are unfortunately expected to move upwards as our government continue to conduct rapid mass tests to further identify the impact of COVID-19 to Indonesia. However, based on prediction from World Bank and IMF, Indonesia is still one of the countries mentioned which can still deliver a positive economic growth. Our Ministry of Finance predicted the Indonesia economy would still grow 2.3% in Q2 and 3 this year, while recovering in Q4 through the allocated $24.6 billion from 2020 state budget for COVID-19. The Indonesian government has introduced a number of policies to mitigate the impact caused by the pandemic, including implementing what we call a large-scale social restriction, which actually impose restriction of public activities and enforce social distancing and remote working in certain regions that are highly impacted by COVID-19. Jakarta, being Indonesia epicenter, has started to implement this last Friday, April 10, 2020. In addition to that, governing authorities in Indonesia have also introduced a number of economic stimulus and regulatory relaxation. Some examples are the OJK, the Indonesian Financial Services Authority, and Indonesian Stock Exchange has provided extension for financial report submission and also extension for the general meeting of shareholders deadlines. OJK also introduced a credit relaxation policy for micro and SMEs to assist business in keeping their operation alive in the midst of the outbreaks. The government also introduced several tax incentives to ease the burden caused by the pandemic. The incentive range from waiver of income tax for a selected group of individual taxpayers to reduction of corporate income tax from 25% to be 22% this year. IAI, as the recognized PAO in Indonesia, has also introduced several measures to respond to the situation. First, our message to all of our members is clear: to maintain professionalism and integrity of the profession at all costs. Our measures are aimed to provide members with access to development opportunities and the latest up-to-date information about the profession, including those related to COVID-19. We have done 2 classes going virtual on March 30. We have successfully conducted our first virtual webinar on April 2nd, 2020, attended by almost 200 participants eagerly discussing issues related to IFRS 9 financial instrument. We look forward to conducting similar online activities to ensure all of our professional accountants in Indonesia will continue to maintain their technical competence throughout this limiting situation. Now, on financial reporting, IAI also fully support the role of Indonesian Financial Accounting Standard Board as an independent standard-setting body, responding to stakeholders' inquiries and to provide clarification to uncertainties relating to COVID-19 and its effect to financial reporting. Indonesian Accounting Standard Board under IAI have issued 2 guidance to provide clarification on implementation of key relevant standards in light of COVID-19. So there are 2 guidance. The first guidance relate to PSAC 8, which equivalent with ISTAN about events after the reporting period, and also PSAC 71, equivalent with IFRS 9, financial instrument. The other guidance just released last week is about the PSAC 68, equivalent with IFRS 13 per value measurement. Due limited time on also considering the question sent to me, I will explain about the first one, which is related to ISTAN and also to IFRS 9. So there are questions about whether we should take into consideration the amount reported under December 31st, 2019 due to the COVID-19. So this is something challenged by a lot of our stakeholders. So in the guidance issued by the board, ISTAN defines adjusting event after the reporting period as events that provide evidence of condition that existed at the end of the reporting period. So the World Health Organization has just announced this outbreak as a global pandemic on January 30, 2020. And particularly in Indonesia, the first positive case of COVID-19 was announced by the President of the Republic of Indonesia on March 2nd, 2020. So considering the fact, based on such timeline, the board considered that the spread of COVID-19 in Indonesia is not adjusting event that affects the presentation of amount recognized in 2019 financial statement. So entities should ensure that the measurement of their asset and liability reflects existing condition on the date of financial reporting. Now, the other issue for the ISTAN also, because Indonesia, starting January 1st, 2020, is the first time implemented IFRS 9. So based on the transition of IFRS 9, all the accumulated differences between the ECL and incurred loss should be charged to retained earning. So the question is whether the entity can consider the COVID-19 when they provide the ECL at the first time of implementation of IFRS 9. So this is something very, very significant to Indonesia, while could be for other countries is not relevant. So during the deliberation of the board also consistent with the view that because the information is still not exist by 31st December 2019, then during the January 1st, 2020, the entity should not include the COVID-19 information into the ECL calculation. That's the second item which is clarified during the guidance. The other one, the most important one, is how to develop the expected credit losses during the COVID-19 condition. So this is also one area which is issued by the banks, the Association of the Banks. Based on the IFRS 9, entity should provide lifetime ECL loss allowance when there is a significant increase in credit risk on a financial instrument. So significant increase in credit risk is really one framework that we need to consider whether we should provide 12-month or lifetime ECL. However, the standard did not give bright lines or mechanistic approach when lifetime losses need to be recognized. In normal situation, especially for the banks or multi-finance company, they usually use 30 days past due, or if there is any restructuring or renegotiation about the term and condition as one strong indication of significant increase in credit risk. So with the current situation, that policy may need to be changed. So for example, because of the COVID-19, government or regulator push or drive the banks to give extension of payment holiday to all borrowers in certain sector. So the question is whether if the bank give restructuring the term and condition and give extension, is it automatically drive the loan to be significant increase in credit risk? So this is the question from the banks. So the board has already give the guidance on the press release that in the COVID-19 situation, we cannot automatically consider that restructuring as a significant increase in credit risks. Debtor whose business is significantly affected by COVID-19 pandemic may be able to recover due to authorities or government relaxation policy. Conversely, it is possible for debtors who have even received a payment holiday or maybe a restructuring facility to remain unable to survive and experience default after the COVID-19 pandemic ends. Thus, entities need to identify and assess and use consideration in assessing whether debtors impacted by COVID-19 can recover and fulfill their obligation after the end of the restructuring period so that significant increase in credit risk does not occur for the remaining expected life of the receivable. The challenge would be how to determine that. It is required significant judgment as the current situation is very uncertain. So your assumption today may need to revise frequently. You need to use past, current, and forward-looking information without undue cost and effort, but need to be reasonable and supportable. Another challenge would be the forward-looking model component. COVID-19 condition is very unique. And
Madam Rosita, I will request you, because we have the very less time now. It's already 8 o'clock in Indian time. You have to brief your delegation.
Okay. So another challenge will be the forward-looking model component. The entity should also need to consider whether they need to revise the model or just use post-model overlay if revising the existing model is not possible or not effective. So that's two challenges answering question. What will be the challenge in application of IFRS 9? I think that's covering my most of my presentation. So in conclusion, again, thank you for the ICAI for organizing this webinar, and hopefully it is beneficial for all of us. Thank you.